Recession, inflation, unemployment rate, economic slowdown. You might be hearing this word a lot lately and nowadays as well. And depending on how bad this situation will be of unemployment and economic slowdown, you will likely to feel its effect. But the question is, what actually recession is and how does it define? How inflation rate related to this recession and why economic slowdown happening right now? And the most important question is, how does the interest rate play an important role in it? To define the recession, people use the term economy and GDP. To define GDP, an economy is an area of production, distribution and trade, as well as consumption of those trade and goods and services. Isn't this definition too bookish? So try this. Every decision you and other people take at a microscope level, whether it's ordering food, buying clothes, purchasing internet plan, buying movie tickets, paying rent, and so on. All that added into a one big giant number, and that is collectively called GDP. Everything seems happy when this GDP line goes up and up and up because companies working well, economy is growing up and up. But when this line doesn't go up, it goes down. And then it's not good for business, governments, employees, and every other entity. But wait, if things are so easy that people are spending money, buying stuff, business selling their products and services, which is helping to grow the economy eventually, then why did the GDP suddenly go down? Why do millions of people start making the decision not to spend the money at the same time? Why do companies start laying off the employees? And why does recession happen? See, to understand this, you have to be clear that proper definition of a recession cannot be limited to only GDP and industrial production, but must also include inflation, unemployment rate, per capita income, and spending behavior of all consumers at the same time. See, recession is a vicious circle wherein it initially started with one such as inflation, but eventually start spreading to others. Like, say example, it start with the inflation. Because there is a inflation, people start spending less money to buy stuff. That will lead to the less production. Less production means companies start laying off the people, and that if people don't have jobs, then there will be a per capita income will go down. That will lead to the more inflation, and that will again lead to the same vicious circle. Spending less money, less production, unemployment. It goes on and on and on until and unless there will be some external input to control inflation and all other aspect, which is the work of central bank of that country. In India, it's RBI. We will discuss in detail how interest rate control or RBI control this inflation and other part. But for now, let's focus on what is recession and how inflation lead to the recession. Coming to second question, what inflation is and how inflation lead to the recession. The standard definition of inflation is increase in price of goods and products across the market. And one of the main reason for that is people have more money in economy than stuff to spend on. But how will it become possible that people have more money to spend? Whenever there is an external factor or internal factor causing economic slowdown like COVID or war, then central bank of country decide to lower the interest rate so that people can continue to spend the money on the market and GDP can grow simultaneously. Now imagine a scenario where people have options to borrow money at lower interest rate. Then what will they do? They will take loans, they will purchase the stuff. It could be a home or vehicle or entertainment stuff or anything which was previously unaffordable to them due to not having money. But now people have this extra money at a lower interest rate, so they will buy stuff more than usual. But it will become a problematic for a companies to meet this sudden requirement for long period of time. So what business owner or companies will do, they'll capitalize on this situation and increases their product price, which can turn into inflation if not controlled in a limited time. Though inflation is good if it rise at a standard rate. But now inflation is growing at high speed, not only because of the high demand in the market, but because of supply chain disrupted due to this external factor of either COVID or war. In addition, with low interest rate, a business owner will also take the advantage of taking loan to hire more employees to meet this sudden demand in the market. This might be appear as a win-win situation because people's needs are met, businesses are thriving, However, this situation becomes problematic when money dries up and banks continue to increase their interest rate to fight inflation. And because bank has increased the interest rate, people will have less money to spend on, so they'll stop buying those additional items. But the problem here is companies cannot reduce their product price from a certain amount because they took the loan, hire new employees to fulfill this new demand in the market. But due to the increase in interest rate, people stop buying their product. So businesses are struggle to sell their product, and if they continue to struggle for a long time to maintain their profitability and reduce their expenses, business owners and companies will choose to lay off their employees, or probably will shut down their factory too if they didn't get profitable. And what was just an inflation a short time ago now turned into an economic slowdown or a recession. Now the question that can come to your mind is why and how is economic slowdown and recession happening around the world right now, or especially in the 2023. See, during the COVID-19, when everything was shut down, businesses were not working and people were losing their job because of the pandemic or the lockdown, every country's government decided to provide direct financial assistance to these countries' citizens. So the people who lose their job due to the lockdown and the pandemic, and people who don't have enough sufficient money, so they can continue to live their life sufficiently. And even the countries like USA print the additional money to distribute among the citizens. So India didn't print any additional money during the pandemic, but Indian government provide direct financial assistance, which includes direct financial benefits, direct benefit transfers, Pradhan Mantri Garib Kalyan Yojana, Atmanirbhar Bharat Abhiyan, emergency credit line guarantee schemes, Pradhan Mantri Awas Yojana, Pradhan Mantri Fasal Bima Yojana, One Nation, One Card, and so on. See, it was essential time when people needed that support, and government provide aid to people who need it the most. But due to the COVID restrictions, people were locked in their home, so they spent less money, which eventually helped them to save money. Also, it was the time when RBI reduced their interest rate or CRR by the 100 basis point, so that money flow do not disturb in the economy. And again, because there was COVID restrictions, people were not able to get out of their homes, so people save the money instead of spending. And when things started to get normalized, people started throwing their money to buy stuff. But supply and production shrink during the early stage of the pandemic. And when production finally started to pick up, it was too late. People were ready to buy but could not get what they needed because the supply chain was completely disturbed. There was a shortage of raw material, insufficient workers, and it was the time when people actually had more money available than stuff in the economy. And as a result, there was crazy demand in the market. So what have businesses done? Business owner take two steps. First, there is price all at the same time, which lead to the inflation. And second, they start hiring new employees to fulfill all these insane demand. The product price keep going and going up. And there comes a time when inflation hit at the highest. People cannot afford the stuff. And it was the time when RBI take the step to increase the interest rate on 8th April 2022 to sustain the recovery of economic growth and fight with this inflation. That's when people became more conscious and cut back on the non-essential purchases. But companies cannot reduce their product price from certain amount because they hire new employees to fulfill that insane demand in the market. And due to these two factors, one, inflation, two, increase interest rate, people start saving the money instead of spending on unnecessary stuff. And when millions of people start making the same decision at the same time not to spend the money, that lead to unsold the stuff at the retail shops, wholesalers and factories. Now, to reduce their expenses, what business owners will do is they will start laying off the employees who has been hired during this insane demand in the market. Now people are losing their jobs, so they will spend less money. And the people who are having the job will become conscious, and they are also start spending less money in case if they lose their job as well. and that will decrease the GDP or the economy and the purchasing power, the market, and it becomes a vicious circle which was started because there was more money in the market than stuff in the economy. And when this vicious circle continues, you will hear the news like recession and economic slowdown. Now come the most important question: what about the interest rate and how does that play an important role? See, every country has a central bank. In case of India, it's Reserve Bank of India, which play important role in the economy. Though RBI is a independent body, however, it works in the collaboration with the government. RBI's primary objective is to price stability in the economy, regulate the country's monetary policy, manage its currency and banking system to promote economic growth and stability in economy. In case of pandemic, RBI has reduced the interest rate to its historic low to provide the relief to the borrowers and stimulate the demands. However, as economy started to recover, inflationary pressure built due to rising commodity prices and supply chain disruption. So RBI began to raise interest rate to control inflation. And in February 2023, RBI increased the repo rate or interest rate for the sixth time in a row in a 1 year. But if central bank continue to raise the interest rate, it can become more expensive for the businesses to borrow the money, which can lead to reduction in investment. And eventually this can shut the companies as well. This is the same thing that happened with Silicon Valley Bank. Increasing interest rate by this US Federal Bank, which is the central bank of USA, play a significant role in the collapse or downfall of the Silicon Valley Bank. How? Because of the pandemic, Silicon Valley Bank received an increase in deposit due to the boom in the tech sector. As a result, bank invest a significant portion of the fund in a longest term US government securities to make profit, which is the safest way to make the investment. However, these government securities value start to decline after federal bank started to increase interest rate to fight with the inflation. Due to increase in the interest rate, startup and the companies were struggling to getting the funding. As a result, tech companies and the new startups were spending their own money from their account, but having difficulty in raising investment. As a result, tech companies and the startups were spending their own money and begin to withdraw money from the Silicon Valley Bank account because of having difficulty in getting investment, which ultimately lead to the collapse of Silicon Valley Bank. So yes, RBI decision to increase the interest rate to control the inflation can lead to the economic slowdown. Because of the increase in interest rate, people were paying more interest on the loans they have took. Though it's cooling down, India has touched high inflation, high employment rate, and high repo rate. Though it's cooling down, and in the third financial quarter of 2023, India able to control this inflation. And let's just hope this increase in interest rate by RBI will continue to work in India's favor.